If you are just joining us and are new, welcome. I am so glad that you are here. A lot of work is going to be done in the next few weeks as far as preparing those a little bit clearer when they're joining us and onboarding of how they should first get into step. But let me just stress right now here, you now have access to these wonderful people, and these wonderful people have done legendary things. It all starts with showing up each and every day. Now, it doesn't have to be for the live session. It can be on the replay, of course. And if it is on the replay, make sure replay crew, leave a comment, smash the like button. Lots of love to you. Go and watch in the announcements channel on the Discord. Make sure that you are watching all of these past videos. They are all so important. People want step 1, 2, 3, 4, 5. It doesn't work like that. Each and every day, we are students of the market and the lessons that the markets are giving us. We're going to talk about that right now as we start this session off, because yesterday we have two things to talk about. So the things that we need to talk about is, first of all, what the entry looks like here on the break and when the break of the trend line. And the other thing we need to talk about is yesterday we were talking about how I didn't take the black diamond entry. If you don't know what a black diamond entry is right now, that's fine. Soon you will be. Soon you will know, right? And by the way, a black diamond, if you're talking about snowboarding or skiing, are the most advanced trails. So unless you're able to go ahead and make turns on those trails with no problem, you should not be on them. And you don't need to be. One of the things that people get wrong when they look at the markets is they look at what is the greatest potential. They're thinking about and planning what they could do if everything worked out perfectly. You do much better off if you're more worried about your risk and risk management. The other things are going to fall into place. By the way, how much time did we spend early on this channel talking about the importance of pushing trades, right? Of cutting your winners short and pushing your trades. We're not getting into that now, but people I think now understand. What I want to talk about is this. Yesterday, as price came into the resistance, this is where we were on our stream together. And I said, well, if you took this black diamond entry, now's the time to go ahead as we come into that first area of resistance to go ahead and move your stop loss to break even. Why? To protect yourself. Well, two things happened. First of all, price spiked down massively. And by the way, as price spiked down massively, in this case, it wound up wicking. Meaning wick down and then wicked up just as quick. And then we put out the tweet and we said, well, listen, if this thing breaks now after doing that, watch out. It might be on. That doesn't, just because it wicked up doesn't mean that like you don't have your stop loss here. If you moved your stop loss here and got stopped out at break even, that was an excellent trade. If you didn't, you're doing this wrong. Number one, because just because price wicked up, it doesn't have to. Price could have, in a heartbeat, for whatever reason, dumped that quick as you saw yesterday, that flash crash, and kept going. And it didn't have to stop here. It could have went, who knows? That's why you manage your risk and protect yourself. Glad that unfolded as it did yesterday to show the people as we, in real time, we're learning real-time lessons as the market affords them. Understand as you came into that first resistance, it's time to move your stop loss to break even and protect yourself. The next question that comes up is like, well, when do you take the entry? There are a lot of people who are just joining us. First of all, let me be very clear. What I do is I go ahead and I look at the markets and I share my view with you, my experience, how I navigate them, and I teach you how to do this for yourself. I teach you how, and this is just true, right? To think a little bit differently. And you know what the beauty of CTM is this translates then into all different areas of your life. That's really one of the gems of CTM. And it's true. And again, this is not like, well, what's the summary? No, this is something that's learned behavior as life unfolds. Look, on all markets except cryptocurrency, we never take a breakout. It's always waiting for the retest. Now that's true. 5% of the time on traditional markets, you get a breakout and price never looks back and you missed it. Whatever. The market's always going to be there and there's always opportunity. It's a question of being able to take advantage of that future opportunity And the only way you could take advantage of that future opportunity is if you have a plan in place and you're able to execute that plan. Otherwise, you're in this like defeating feedback loop and you're never going to win. Now, I take breakouts in Bitcoin during its bull market phase. What do I mean by that? Is I don't wait for a retest. As soon as price breaks the trend line, I take the breakout. So for me, that entry would be right over here. How you do that and what you're looking for, I could tell you in this case over here, as price came into the resistance and came back, for me, the breakout would be as price makes a higher high than that little bit like right there. That's how I'm doing it in that situation. Another thing, you're looking at price, the entry for me over here on this spike out above. Stop loss is then at the bottom of the wick. That's all the way down over here. Yeah, this is how you're managing your risk. If you took something like this trade over here and you were risking, 2% of your account and the stop loss is here, obviously as price rises, you're making way more money, but it's the same risk over here. You're still risking that same 2%. And now like price has to rise more for you but it's a safer entry. Once price broke the trend line, it's a higher probability trade. And again, don't look for like what max potential could be if you take on the most risk and everything goes well, but because there's so much potential, it's ridiculous. You just want to do these things right. All right, so that's a good way to start it off over here. And that was building off of yesterday, what we were talking about. Yet, no, I don't wait for the close of the bar. I take the breakout as it's occurring. And I just want you to see in this particular example over here, to see the high of the bar into the trend line, price comes above that area. That's my entry right over there, right? So I have a little bit of space, but it's on the break. So that means I take this trade. That trade went against me. And that trade went against me yesterday, And I had no idea that it's going to come back, but it's coming back now. That's why stop loss is down here. And you know what? Like every time, except this time, right? The first two, I said, I'm standing aside. I'm not taking it. You all remember on the first two buy impulses. And the third one, I was like, well, that one, it looks good. And hopefully it is good, but it's triggered now. And off we go. Up we go. And this also, as you all know, looks like a retest of the previous all-time high. You might not understand that, what we're talking about when we say that. But, this comes from Miles' discussion. Although the all-time high was up here, price the market is making the new all-time high, and it's coming back, and it's finding support. We were in this area around $60,000 for almost 2 or 3 months. And that's where price is finding the support of the new all-time high. And that's assuming that we do continue resuming out over here. It's confirmed once we actually make the next new all-time high, then that will be confirmed. And then is that most likely what the low of the coming bear market is? Yeah, well, that would be the best base case to go off of, I think, in my opinion, until we get a cycle peak in and then can reassess. Wes, good. Well, great trading. Wes saying that I took a stop loss on that break even coming into resistance. But great stuff, because you did it right. And the only way that you're a success in this game over the long run is by doing that. And that's that. Because the person that didn't do that, Wes, there's no room for wavering. You respect your stop losses, and that's that. Because if you don't, you'll never make it. But the person that doesn't, and then this happens, and they didn't eat the break-even stop loss, right now, they just did something completely damaging psychologically in their head. They just program their brain to believe that it's to their benefit not to follow the rules they put in place. And that leads to ruin. And that ruin, is eventual whenever it happens. Because all it takes is one time for this price not to wick back up, for price to come down. And, we've all seen things happen in the market. And this thing could drop out from the bottom. And then all of a sudden, they went from not taking a 2% loss or whatever they're risking, right? And they wipe out an account. And eventually, that is what's going to happen. So, Wes, good job. And, that's a good way for us to start off our Friday session. I'm glad we get to do it without a rush. But I think we're covering the single most important lessons the market has showed us in the past 24 hours. And it was set up beautifully by our work together. And that's what it is. It's time well spent, but it's work. and the work that we put in yesterday, following the lessons of the market, and then that continues. And that, for all those who are just joining us, is how you do it. And it takes time, and it continues to take time because the market's always different. You're learning how to adjust according to what's going on. And there we are. So good way to start the session. We get to go right into a next little bit of fun over here. So let's do that. So we're looking at right now. Well, I guess I'll start it off this tweet. I'm going to start it off this tweet over here. And I was just, we've looked at this fractal together. So we're all aware of this fractal, and, looks like it's playing out on time. And then it brings up a good question. So Jordan, like historically, Bitcoin outperforms Ethereum in Q4, what we're in right now. And Ethereum mostly flies in Q1. So this is, again, if you're new here, you want to go back to the Exiting Bitcoin playlist and look at the video we did 2 weeks ago on the event when Bitcoin peaks and right before it peaks, the move into altcoins as a possible actionable event. But that's what's being discussed. And I kind of broke it down with the help of Ian a little bit clearer. 4 years ago, Bitcoin outperforms from mid-cycle low to the cycle peak on an ROI basis. Same on the blow-off top alone, right? Ethereum Bitcoin favored Bitcoin during wave 2 in October, November, 4 years ago, saying that that the cross outperforms in Q4. And then a week before cycle peak, Ethereum takes over. This time could be different, though. There are signs. We're going to look at that right now here together. What are those signs that really this could be different, right? And then I start off, and I'm just pointing that what's going on. Brad, Michael, all CTM, great to see you here on this Friday. What is not that different is this. If you look at this line over here on October the 29th, 4 years ago, this is where the cross was, and it's here today. And it's almost sideways. There's not that much of a difference. Now, what is different 4 years ago is that we saw Ethereum making those huge gains against Bitcoin. Here's that big spike. And then when markets do, right? Markets like, if there's volatility to the upside, you normally see volatility to the downside. If we see a big blow off top at the end of this cycle peak, it's probably coming down pretty quickly with that, that 40-50% move rather quickly, followed by the bounce of hope, and then a 70% move in before the bear market even really begins. Because after that, the grueling begins, right? But over here, you have a big move up and a big move down, and the market kind of reverts to the mean. This time, we didn't have that big move up and not having that big move down. And so that it's kind of similar in that aspect. It's not much different. That's an important observation. By the way, all you want to do is constantly make observations. You don't want to come up with a theory and then place a bet on that, hoping that happens. You want to observe the market until everything is so clear to you that, as Jim Roger puts it, you walk over to the corner and pick up the money you see lying on the floor. So that takes time and patience, but it's a learned behavior. And the thing is, the easier it is for you to make money, just the more you'll do it. So a lot of people get caught up and think that to make money, I need to be trading. What alt is pumping today? And that ends badly. Anyway, so that's one difference. And then we have to talk about a breaking point where, because I pointed out, this time could be different. And we were looking, right, at this trend line over support, and it broke. And then we talked about the black diamond, stand aside. We talked about the green line. If you're not, this is for those that were watching. If you're not yet, as you begin watching every day, all this stuff makes sense going forward. And then we had the green line over there, and then the breakout, the retest, and resumed up. And we talked about this broken support should now act as resistance. And then we had the line over here to see if it resumes down. And it becomes different if this doesn't act as resistance and we wind up getting above here, this point of cycle. Then that would lead us to believe that, well, we are seeing a pretty different, because that would mean to me that most likely we're going to take out that swing high, or there's a good chance, or at least you can manage your risk and know where that's not happening, because we fall back down, And that's where we are this morning. I mean, and we're being rejected further now as the day develops, but we don't know. And it's not just this one touch over here. I clone the line, and I clone the line because you could see clearly that, well, it belongs like that. So we have a little bit, this is kind of like the DXY, right? The double channel we got going on over there. And that's what's happening. Ian then, unbeknownst to me, at the same time, right on time, helped us get a little beautiful, let's put it that way. And so without the notes, what we're doing here is looking from mid-cycle low. As we know, 4 years ago, Bitcoin outperformed on an ROI basis Ethereum, and we're not seeing that this time. Lined up from the mid-cycle low, Ethereum's outperforming. That's different. By the way, going back to the April-May sessions, that was something that the modeling crew was looking for. Ian was talking about, or whoever was, we were talking about the observation that we want to see coming out of the mid-cycle low, whether or not this time Ethereum winds up outperforming, and it is. So that again, you never know, but you want to have different if this then that variance ahead of time. And we could say now, well, that is happening. Ethereum is outperforming Bitcoin off that mid-cycle low. It's still early. What it means, well, I don't know, just making observations. So this is good, Brian. It feels like most people underexposed to Bitcoin and heavy into Ethereum and all other alts and or NFTs. With this time of year for Bitcoin's time, that is yet to come true. Again, we did look at how really there's not too much different between Bitcoin's dominance, specifically to Ethereum, as it was 4 years ago, except 4 years ago, you saw a lot of volatility to that upside and then the downside. And right here, it's a lot more evened out. But look, the fact that there's huge speculation taking place inside the altcoins, that's extraordinarily bullish for Bitcoin. We want to see that happening right now. That is a clear signal that everything is right on time. So we're very, very happy about all of that, right? And then that also is including this. This might be the one yesterday. Lark Davis, this guy has a lot of followers, 605,000 followers. And he's saying that there is actually a decent chance that with all the insane adoption happening, that we are indeed moving toward a super cycle. This will be the roaring 20s for crypto. And I told you all at exactly this point in the cycle, you would hear stuff like this. And for me, that's a good sign that we're getting closer. And remember, if we do move into liftoff and into that blow off phase, that's when that chatter is going to get crazy, that this don't sell your Bitcoin ever, super cycle, last cycle. And here it is happening right on time. So we like that, right, Brian? That's also, we want to see that happening right now. Jason, thank you so much. The homepage was redone. What we're doing next is working on the member area. Right now, when you log in, you have all the course material. And what I want to have is, so that it's so hard to find the Discord link, first of all. We want to have a page that has where you could watch, where you could find the CTM only videos. It would probably be a really good idea for me to have a 2-3 minute video explaining the importance of watching these videos in each and every day and how that education unfolds. And then I want to have below it access where you could follow the course, take the course, which is absolutely Forex focused. In 2022, I'm going to redo that for everything that we've done here together and are doing together over the last 2 years, and have it much more crypto focused. But that course right there is foundational for CTM principles, risk management, and I think that everyone should spend, and it could be done pretty quickly. People do it usually in a weekend. That's important. And then I want to have on that same page important videos, like the video that we did recently on the actionable event at the end of the season from Bitcoin into alts. Like the video that we did last week on macro, like the video that we did this week that was so important, talking about the bear market, talking about the mental preparation that will be required, talking about specifically when we exit Bitcoin, the risks are, what they are, and how we're going to be maneuvering and protecting ourselves. I want to have that stuff just so that, like, and as well as, of course, like how to thrive in CTM and the playlist, and how to have access, right, to Ted's phenomenal work here on the meta model. I just want to make it much easier for everyone. So, and then from there, we could work on the fine tuning of the stuff. Yes, Quizzle, that's happening, I'm going to say by the latest Monday. That's also depending on whatever the schedule is of the person making the changes. Everyone, obviously, who's here right now, that does not apply to you. If you're a monthly subscriber, you are grandfathered into that. So that does not apply to you at all. And that's also really important. First of all, like, I mean, obviously, what we do here is extraordinarily underpriced. But you know what? The amount of the type of person that we want to attract that's going to come in and fit into this community and add value to this community, that's going to help filter out a lot of the noise that we don't want in here. So that's important too. Yeah, it's important, Red, but the next version is going to be much better. That, like, it's going to be much better because we've accomplished a lot here in the past 2 years, including one of the simple things was strategy number 2, how to trade Bitcoin in the bull market, was, on the corrections that you go ahead and you scale in. You might want to, on a 15%, take a bite. Then you might want to at 20, 25%, and you would scale in during the correction on strategy number 2, how to trade Bitcoin in the bull markets. And then we've since evolved and got it to the extraordinary precision of the way that we take the corrections out, whether or not it's starting with the first black diamond entry or waiting for the conservative entry. That's way more important, and it's way more focused. Will you take a little profit off of Bitcoin 82,000? No, that's cute and not worth it. If Bitcoin came above 90,000, I would get cute. Yassine, me personally, and we'll be here together. So I'm going to we'll see what's going on in the market, what the market's doing, why that's happening. And, price would have to prove me that, you know what, I don't believe that it's not going to pull back and go straight up. And I do believe there will be a pullback. And if we went as high as 90.94, at that point, I think that's the spot where the market forces me to go ahead and take some profit off. So I'm never in a rush to take profit off. I prefer adding out of the correction. But that type of stuff is important. But right now, we'll continue to take it in here. Laser focused with the best team there ever was. Everyone, have a beautiful weekend. May God bless you, and I'll talk to you soon.